Daily Rates Live with the Mortgage Calculator. Today, we're going to go through some live mortgage rates and then do a deep dive into CDFI No Ratio Owner-Occupied Loans. We'll get into it shortly here. Just going to wait a couple minutes to go live on all the different platforms and give everybody a chance to tune in. But thank you, everybody, for tuning in nice and early. We put the chat up on the screen, so feel free to drop a comment there in the chat as you tune in. Happy Friday, everybody. Great product here that we're going to do a training on that not a lot of people know about. So the deep dive topic for today is going to be great. I see some comments already coming in. Thank you, everybody, for the comments. We'll get started in just a moment. And as we go through the presentation as well, feel free to drop any questions that you have about the program we're going to be talking about today. All right. Looks like we are live on all the platforms, so we can get started. Keep dropping comments as you tune in and drop any questions you have there in the chat as well. And let's go ahead and get it started here. We'll take the chat off the screen and get into it. So welcome, everyone. My name is Kyle Hershey. I am the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. And what we do every morning on this show is go through some live mortgage rates, and then we do a deep dive into a different loan topic every day. Today's topic is definitely something interesting. It is the no ratio CDFI owner occupied. So this is essentially a loan where there's no income verification, no employment verification for an owner-occupied property. So definitely interesting here. We'll have Jose, our sales manager, 28 years of experience, do a deep dive into that loan topic here shortly. But before we do that, we'll do what we do every morning, which is pull up our pricing tool and go through the live rates for today. So Nick, if you're ready, let's go ahead and pull up the pricing and let's see what the market is looking like this morning. All right, let me switch my screen and we will check it out.
All right, this is our live pricing tool. This will show us the general rates and the APR for today. It is October 6th, just after 11 a.m. So we should have live rates coming out for all of our basic programs. If you'd like a full loan estimate with a breakdown of all the fees that go into the APR, full itemized loan estimate, please get with one of our team members. We have over 400 licensed loan officers in 24 states for primary homes, and we can do our business purpose loans in 44 states. So for our demo, as we do every day, we'll set up a scenario and compare across the programs. We'll set up a $400,000 loan amount. We'll set an LTV of 80. And like I did before here, we're going to switch it up a little bit and go with the lowest rate here. So we'll ask the computer for the lowest rate we can offer. And we're going to compare conforming to FHA. And then we'll check out our expanded guidelines, also known as non-QM, where we have over 5,000 additional programs. We also have VA and USDA. Remember, VA is only for eligible vets and active service members. If you are, let us know. We can do it, no problem. And same with USDA, that's only for eligible properties. So since not everybody is shopping in an eligible area, we don't do those live. So we'll start with conforming conventional. We'll do a purchase, 30-year fixed loan, primary occupancy, single family home, 1 unit, state of Florida, county of Miami-Dade. Excuse me. And for all of our demos today, we'll use an estimated FICO score of 760 and an estimated debt-to-income ratio of 40. So with these settings, as we do every day, let's check out the rates this morning. All right, so just like before, this is technically a portfolio product. So some of our options here are getting a little aggressive. So the best actual Fannie Mae option is here, but the best actual option is here. 7.125 rate, 2.5 discount points and cost, final APR of 7.342. And the traditional Fannie Mae is just right about there as well, 7.25 rate, 2.25 discount points, final APR of 7.458. So these are some good options for our borrowers looking for the lowest rate options here as the rates are going a little bit crazy. So if our customer doesn't qualify for any reason for conventional, let's go ahead and check out the FHA options. So we'll do the same thing here. And everything will stay exactly the same as our other demo, so we can compare across the programs, apples to apples. However, FHA does allow a little more leniency on credit issues as well as a higher debt to income ratio. But so we can compare exactly across the programs, we'll keep everything the same here. And this morning, the best FHA option here is coming up with 6.5 rate, 2.334 discount points in cost. That's the final APR at 7.137. So just as it has been pretty much every time we do the show here, FHA in this example is actually a touch cheaper for our borrower that may qualify for both. But our borrowers that need FHA, definitely a welcome change as they have updated the MIs this year for FHA. This APR does include the upfront and yearly mortgage insurance. That's why you definitely have to look at APR when you're considering FHA and comparing it. Now, where we love to specialize is if our customer, for any reason, doesn't qualify for either program, FHA or conventional. Many other banks or lenders will have to deny that borrower. But that's where we have over 5,000 additional options to help our borrowers out under expanded guidelines, also known as non-QM. And we typically use non-QM to change the income. So we see we have a new income option pop up here where we can edit the income we use. Full docs, what we have to use for FHA and conventional, that's 2 years of tax returns, what most people are used to. However, we'll usually choose a non-QM program to take advantage of one of these alternatives. We have asset-related programs, business bank statement programs. For investment properties, we have some specialty programs we'll talk about shortly. We have our personal bank statement 12-month. That's the most popular program by far. We have RSU, stated, VOE, 1099, P&L, and no income CDFI. Most popular, though, is the 12-month bank statement. That's for our self-employed borrowers. Many times it's our self-employed borrowers that need some help qualifying. When they submit 2 years of tax returns, they may have various write-offs and may just not qualify at all, or just may need a little bit more income to get that home they really want because of various ways they file their taxes. So we'll solve that problem for our self-employed borrowers here using no taxes at all, just their last 12 bank statements to determine a debt-to-income ratio of 40% in this example, using no tax returns, just the cash flow from the last 12 bank statements. Many times our self-employed borrowers will qualify for double or triple the income using these methods and can therefore get the home they really want. So let's check out the non-QM options today. The lowest rate options. All right. So this is actually beating the conventional here. So 7.125 rate, 2.5 discount points in cost, 7.242 APR. So about the same rate as conventional, but it's actually right in there at the same cost. And we have a few other options. Notice if we scroll down here, there's tons of different bank statement options. Some of these may allow other issues to be overlooked, such as bankruptcies and foreclosures and other credit events. So not only can these non-QM programs use alternative income calculations, but we can also get around other guideline issues that would cause our borrower to not qualify. So please, with our team, there's hundreds of different options here to find the best one. And for our final couple demos here, we always want to do some investment properties. So we love to work with investors. It's our most popular programs by far. So we'll set up our same scenario, 400,000 loan, 80 LTV. And this time we can actually go to a little bit higher buy down here on the investment properties. So we'll find the lowest rate option that we can offer for investments here. So we'll start with our conforming option. Everything will stay exactly the same as all our other demos. The only thing we've edited here is the occupancy. So let's see what the best option we have for conventional. Wow. So again, these are non-conventional programs, so it's a little confusing here. But using the same method, we have options that have portfolio products, and they're really beating the conventional programs by a long shot. especially for second homes and investments. So that's why you see that come here looks so much differently. So it's technically two different quotes here, but the best option using the same guidelines, but not actually Fannie Mae, using Fannie Mae guidelines, but not actually Fannie Mae loan, would be a 7.125 rate, 3.25 discount points in cost for an APR of 7.367. So absolutely amazing for these specialty programs to get around some of the issues with the conventional Fannie Mae, Freddie Mac. Now you see here is the best Fannie Mae option. Very different quote, 7.875 rate, 3.5 discount points in cost, final APR 8.125. So you see here with the portfolio products, we're able to get some loan level price adjustments removed, so they look very different. But you'll see here all the standard conventional options are all right around the same. These are the traditional ones. Definitely recommend our borrowers out there for investment properties. Conventional is going a little bit crazy, as you can see here with the rates, but our specialty programs are getting very aggressive, almost a whole point cheaper here for these specialty programs. Definitely check these out. Now, let's go back and do our investment property option, ADLTV, and this time we'll check out our non-QM options. So we'll do expanded guidelines, aka non-QM. Let's set this up correctly for the lowest rate that we can offer, maximum buy down. And the first thing we need to set here for a non-QM option is income. And the most popular income for an investment property is going to be DSCR because it doesn't require any income or employment from the borrower. Simply use the estimated rental income from the property to determine a DSCR value. Stands for debt service coverage ratio. If the estimated rents can cover the mortgage expenses, the PITIA of the mortgage, that's a ratio of 1.0 higher, aka the property cash flows on a monthly basis. If the property doesn't cash flow on a monthly basis, that's a ratio under 1. We still have options for that, but they're limited. For the show, we always put 1.5, which is the highest value, so we can see all the options pop up. And we must select a prepayment penalty for any non-QM investment property. 3 years is standard. That's what we always choose. There are options for 0 that will cost more and limit what shows up. Same thing with 5 years that will limit what shows up. But if our customer wants to hold the property, that will save some money. Most common is 3 years, so that's what we always use for the demo. So let's check out the lowest rate options for DSCR. All right, looks like the best combo here, 7.5 rate, 3.225 discount points and cost, final APR 7.641. So this DSCR is absolutely smoking conventional, but we do have that specialty portfolio, quote unquote conventional, using the same guidelines, full doc program, that comes in a little cheaper. So our products out there getting a little bit aggressive as the rates go a little bit crazy. So definitely recommend our customers that do want a conventional. There is that one super special program that smokes everything. Then we have our DSCR, which would probably be my second suggestion to any investor out there at the moment, because this beats conventional by a long shot here, by almost 0.5 points today for a DSCR option. So most investors will probably take this option over anything else. Now, if you scroll down, you see we have dozens of different versions of this program, a little bit higher rates and costs. Some of these may allow bankruptcies and foreclosures. Some of these may allow short-term rental income and other variations of the program. So please get with our team. They'll find the best ones for you. And now let me switch my screen again. And we'll go into today's topic, which is going to be CDFI No Ratio Loans. So these are even more specialty loans than what I was talking about before. So CDFI is a designation by the Treasury Department for certain banks and institutions that are out to meet certain goals. So I don't want to put words in Jose's mouth, so I know he has the full definition. We always want to go over of what a CDFI institution is. So we are not a CDFI institution, just to make it clear. We work with many CDFI institutions that have these products. So this would be something where these are very special products that are meant to essentially serve the underserved, minorities, and other specialty areas. So very special designation given to very specific set of banks and lenders out there to accomplish very specific goals. But as long as our borrowers align with those goals, these are some of the most unique programs we offer. So tried to keep it general there, Jose. So why don't you define the CDFI officially, and then let's go into the examples, please.
All right. Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. Great to be with you here today, especially strap yourselves down. I got quite a few quotes for you today with the CDFI. We have many different variations because it is a very FICO score sensitive program for your LTV, basically, and their rate, of course. But this is a very interesting program. We've had very good success with it in our company. It allows you, it's a great tool. It allows you to adapt to many different loan scenarios. This is where you really got to be outside the box, really be a great consultant, and just put this type of deal together. I mean, we've had them where, second home, no income, no job. They're 10 miles away from the current primary because they get paid in certain type of stock options in the future. So we do no income, beautiful deal on a $1 million plus transaction. I think there was a $1.4 million loan. So that was quite a nice, satisfying loan to close. I've been able to do this with a second home purchase from a borrower living abroad, U.S. citizen, but hasn't been claiming income on his tax returns in the U.S. for his income abroad. We've been able to have them purchase a second home so that their child can daughter actually can go to the university in the U.S. and live in the second home. So, two amazing solutions to what other types of situations would probably be denials. So as Nick was saying, this is meant targeted specifically for certain underserved minorities, Black and Hispanic, basically, or variation thereof, right? So it is separated into what we call CDFI eligible borrowers and non-CDFI eligible borrowers. But do not be confused by the non-CDFI eligible borrower label. That just means they're not eligible for the discount, for the CDFI discount, but they're still eligible for the CDFI loan program, right? So the difference in the rate between the CDFI eligible borrower and non-CDFI eligible borrower is 0.375 of 1% in the rate, not in the points, in the rate. So it is a nice discount. So, it's a good marketing. It's meant to, try to broaden the home ownership footprint, but also keep in mind that it comes at a cost of 20% down, so they do have to have assets, right? It could be a gift from family, from, different, you have to look at the guidelines, but the down payment could be a gift, but they have to have on top of the down payment 24 months of reserves for PITI and, if applicable, association fee for a PUD. So, but they're out there getting those loans. You never know. Somebody sells a property, for example. They got a lot of money. They're relocating. They're going to get that job within the next 6 months, but they want to take their time looking for the job. Perfect candidate, right? They can easily put 20% down and show 24 months reserves and have money left over. So don't be discouraged by the down payment, because this is a very powerful program. So let me share the options I have here with you. We'll go quickly through them now that I explained to you the how the program works and the difference between CDFI eligible and non-CDFI eligible. Now, there is also not a difference between a primary and a second home. Very interesting, right? They both have the same rate and the same cost to the rate and the same LTV. No difference. So very interesting. So this first example here is 740 credit score, at 720 plus, which is the last point to make. Max LTV is 80% at 720 plus. All right. So this example here, 740, best case scenario rate. You're looking at 10.25 with 2.5 points in fee. Now you can buy it down a little bit more. You can buy it down 2.75 or 3 points. So I'm showing here the midpoint. I think there was also like a 2.25 option, but it was a higher rate. So 10.25, 2.5 points. Now you'll note that at the this is the non-CDFI borrower. So still 740 plus, but I wanted to show you the non-CDFI borrower, and you can see 10.625, same cost, right? Same loan, just this is non-CDFI. So then we have our CDFI eligible second home, like I mentioned, same rate. Second home non-CDFI, again, 0.375 difference in the rate. Same cost, same LTV, which is amazing. Now we drop here. Let's get to the 721. Well, we'll get this one first. 700 to 719. Now your LTV drops to 75. 75% LTV. Though you have a little bit better pricing at 75 either way, even though the FICO is a little lower, you have 10.375 at a cost of 2 points. So that's a 0.5 point lower. Now all of these are CDFI eligible rates I'm giving you, but keep in mind non-CDFI eligible, the rate would be 0.375 higher than what you're seeing here. So this one are 680 to 699. We're still getting 75% LTV, 10.875, 2 points. And 660 to 679, 660 is our lowest FICO score applicable for this program. It is 65% LTV max, 35% down. And that's 10.5% rate at a cost of 2.5 points. Now our, cash outs, maximum LTV is 70% and 740 score here. You're looking pretty good rates because now, again, they really give you a break when you're dropping the LTV. So you're 10.25 at a cost of 2.25 points on the cash out. And now our 720 to 739 credit score cash out is 65%. Now rates under single digits there, 9.75 at a cost of 2.25. And our 700 to 719, 65% again, 9.875 this time instead of 9.75. So they ding you a little there, 0.125. And primary cash out 680 to 699, we can still do now here we're at 60% LTV, so but still 9.875, 2.5 points. And our last option here is our lowest credit score. So they don't really change the credit matrix for cash outs or a purchase because sometimes that is a situation that occurs where cash outs being a little riskier type transaction. Not only do they lower the LTV a lot of times by 5%, but they also raise the FICO requirements. So in this program, they're trying to try to serve as wide of an audience as possible there. So still get 660, and it's 9.875, 2.5 points at 60% LTV.
All right. So just to clear it up here, Jose, this is available for everyone, right? So this is a product that is meant to serve certain borrowers, but everyone can take advantage of it. But Black and Hispanic borrowers essentially are going to receive a discount.
Yes, sir. 0.375 of 1%. So that's a pretty good discount there.
And Leonardo has a question here if we want to pull it up. He's asking, this program is for borrowers that don't qualify through conventional because of what? Well, remember, this is no income and no job verification. For those of you used to the DSCR, it's almost like a DSCR for a a primary home, right? It's not taking anything into consideration. You want to expand on that, Jose?
Yes, sir. Yes, that's why, that's how we introduced in the beginning. That's how I was touching base on the borrower, for example, that's relocating, doesn't have that new job yet because they want to take their time looking to get the right job. They don't want to just rush into it and all that. They can, sell their current place, relocate, qualify for this loan without any need to verify employment nor verify income of any type. Nothing, zero. And it's also, even though it does ask for a 20% down minimum and 24 months reserves, it is very lenient in that it allows for, the down payment to be a gift, for example. So, I mean, it's very good program considering it's a no job program. Nick used this program a lot with the crypto borrowers, when the crypto borrowers were borrowing and buying places. He did quite a few crypto borrowers with this option, right? 20% down and no job.
All right. Nicole's got a question. Would this program work for people in the service industry, like bartenders, for instance, that may make good money but don't necessarily claim it on taxes?
Absolutely. This is the perfect program for anybody who's on a variable income type job, whether it be W-2 or sales, especially sales, where, or self-employed, where you're going to have high write-offs. So definitely, because this program is a no income verification, no job verification, no tax returns, no tax return transcripts. This is a no nothing verification regarding income or employment for the borrower. So it's a perfect loan for anybody in the service industry, especially bartenders.
All right. So Keith is asking, does it have asset seasoning?
I would have to research that one for you, Keith. But if I recall in my research when I have a presentation on this. I believe no. I don't believe there's any seasoning. You just have to provide the statement.
I mean, they need one statement, I believe.
Yeah.
So
Yeah.
30 days sourced and seasoned. Some have 60, but they tighten and untighten these programs a lot, right? Used to be 6 months reserves. Jose just said 24 months.
We've had some, let's say, retrenchment in this product line. So they really there's less conduits for it, but those that are still offering it are the ones that stuck to the what the program was really for, like the CDFI eligible and all that stuff. So there's plenty of opportunities, but they depend on secondary as well. And if secondary says, I'm not going to buy the package unless you tweak it and do this and this and this, and what good does it do to have loans that they can't put into circulation in the secondary?
All right. Leonardo saying, awesome stuff. They can later refinance into a better rate when they have a job or income.
Absolutely. We usually want the borrowers to wait 1 year before refinancing. That's usually the best case scenario. In many cases, also to get the best value on the property. In most cases, on these primary homes type programs like this one, I think it may have a 12-month seasoning anyhow. So if you want to get the best value, current market value on your refi, always best to wait 1 year. But definitely, Leonardo, that's the beauty of these types of programs. You're resolving their need right now, right? Most of these people have a need, and then usually they're gonna be able to refinance if they choose to. Especially, the rate may be a little bit high now, but they could always do a refi, even a refi into the same program when the rate drops. It will drop. These programs were like in the low sixes not too long ago.
All right. I don't see any other questions, but that was great. Great tool here. Again, as I said in the beginning, a lot of people don't know about it. And at the Mortgage Calculator, we love to make sure we have all the tools in our tool belt that we possibly can have to make sure that we can help our borrowers. So thank you, everybody, for tuning in. We do this show 11 a.m. Eastern every single weekday where we go through the live rates and do a deep dive into a different topic. So we'll be back next week with some new topics. Thank you, everybody, for tuning in. Thank you, Nick. Thank you, Jose. And we will see you all on Monday, 11 a.m. Eastern, for the next episode of Daily Rates Live with the Mortgage Calculator.
Actually, it's a holiday Monday.
Oh, you know what? You are right.
We will see the barbecue.
There won't be live rates because
yeah, you're right. So we'll see everybody Tuesday for the next episode.
In South Florida, we'll still be enjoying the pool. All right, have a good weekend, everybody.
Have a great weekend. Take care.